If you use top-down analysis, you will realize that the daily levels, right, and the trend is you might not look at top-down analysis the same after you watch this video. Let me explain. So what I do every single day with this strategy is I look at the 5-minute chart. Sometimes I do look at the higher time frame, but let me explain why I really don't focus or rely too much on the higher time frame. Because when I first started out, I started trading the indices, so the S&P 500, right, the Dow, the Nasdaq. And when I was trading those markets, I was trading one market at a time. Let's say I'm trading the S&P 500, I'm only focusing on that market. Or if I'm trading Nasdaq, I'm only focused on Nasdaq, right? And if you use top-down analysis, you will realize that the daily levels, right, and the trend is not going to line up every single day if you trade in a lower time frame. So let me show you a good example right here. Let's say that this is the daily chart right here, guys, right? And the market's going up. And let's say that I'm looking for the market to come back to this key level right here. Well, it might take a week or two just to come back to that zone, okay? It might wiggle a little bit and then finally come back to the zone right here. So as a day trader, when the market is moving up and down every single day, there are opportunities. And just only looking at the daily chart or the higher time frame, I might not get those opportunities if I only focus on that. So that's the reason why I decided to focus only on the 5-minute chart. Now, if the daily chart or the higher time frame chart lines up with the 5-minute bias, guess what? That's a bonus for me, okay? Anytime, the higher time frame lines up with my 5-minute chart, that's a bonus. But that's not going to happen every single day. A lot of trading gurus online will tell you, you have to look at the higher time frame in order to take a trade on a lower time frame. And guess what? The crazy part is they are right? But you want to hear something even crazier than that? There are other traders that are profitable and they only focus on the 5-minute chart, right? Or the 15-minute chart. So you can actually have two traders be right at the same time, okay? Just because you do top-down analysis doesn't mean that that's the only way, right? You can have another trader that only look at the 5-minute chart or the 15-minute chart and they can still be profitable. The best way I can explain it is, let's say that, we're looking at basketball and you have two teams that went to the finals. I can guarantee you both teams are very good because they made it to the finals, but they probably don't play the same. They have different styles, right? One team might, play at a fast pace, spread the floor, shoot a lot of 3-pointers. And the other team, they might, play at a slow pace. They might like doing a lot of pick and roll, right? Post up, maybe sometimes shoot threes. So you will have two teams that's doing two completely different things, but they both are right. It's the same thing with trading, guys. Two traders can be right at the same time. So I rely on my 5-minute chart heavily because, usually I'm focusing on one chart. Nowadays, I do trade other markets, but for the most part, I'm looking at NASDAQ and I'm seeing what NASDAQ is doing. And I'm looking at these lower time frame levels. And I'm going to show you guys right now on the chart, right? So let's go. So I'm going to show you guys on the chart what I mean, right? But before that, you have to understand, before you take a trade, you have to know the direction of the market, right? That's the first thing, okay? You have to understand, the direction of the market. You have to have a bias. I know some traders say, oh, you shouldn't have a bias, or, it's not good to have a bias. To me, that is, not really a good thing to say. You have to have a bias, because if you don't have a bias, how do you know when to buy or when to go short, right? That makes sense. So you have to have some type of bias. Now, one thing you have to understand is you can't get married to your bias. So I think that's what traders are trying to say when they say, oh, you shouldn't have a bias. No, you shouldn't be married or get married to your bias, okay? Yes, you should have a bias, because that bias is going to tell you whether you should be buying or whether you should be selling. So let's go on the chart real quick, guys, right? So right here, we have the 5-minute chart, right? And we have key levels right here. So this is what I'm looking for every single day. I'm looking for support and resistance and supply and demand, okay? So right here, we have a nice support resistance trade. And notice how the market is bouncing off this level, okay, multiple times, right? And we have a nice rejection at this level. So first, we're looking for the direction of the market, right? You have to have a bias. Second, we're looking for the market to come back to a key level, either support or resistance or supply and demand. Third, we're looking for some type of rejection. So we have a rejection right here, okay? And I have a lot of videos on my channel showing you guys this live, Okay, so I don't want to hear you guys talking about, oh, show me a live trade. Guys, I have so many live trade videos. This video today is just explaining the strategy. Okay, go on my channel, see where I trade live using the same strategy. So right here, we have the market reacting to this level. We're looking for either rejection like a pin bar or a nice solid bar closing pretty much at its high, right? So right here, this would be a nice trade. And to me, a good starting point would be a 2-to-1, meaning 2 times your risk. So let's say you're risking $100 or $100, you want to gain $200. So that could be a simple way you can get profits from the market, or you look for key levels. So right here, we have a key level right here. You can get out right here, or we can get out at this key level right here, okay? So that is one example. Let me show you guys some more examples. Now, before I show you guys another example, I forgot to tell you that another reason why I like, looking at the high time frame, okay, is because let's say the market is pulling back, right? And we are in an uptrend. This is the daily chart right here. Let's say this is the daily chart and we are in an uptrend. Most traders or trading gurus will tell you only trade the higher time frame direction, right? Now, this pullback right here, this one, let's say it's 1 or 2 candles. That's 2 candles, right? 2 daily candles on a 5-minute chart is going to look like a crazy downtrend. So on a 5-minute chart, it's going to look like this, right? Crazy downtrend. Guess what? There are opportunities to trade, right? So you can trade, this key level right here or this supply right here. So there are still opportunities going counter trend because the daily chart is a much bigger time frame. So one candle, guys, can give us so many opportunities on a lower time frame. So this is another reason why me personally, I do look at the higher time frame, but it's not my main chart. My main chart is the 5-minute chart. So let me go and show you guys some more examples. Now, before I show you guys this example, hit that subscribe button if you want to learn how to trade the market the right way. If you are a struggling trader that's trying to get better, hit that subscribe button, hit the all notification, especially so you get notified so you can see my next video, all right? So this example right here is a classic 5-minute example where, again, I'm not looking at the high time frame. We're going up, right? We're looking at the direction. The direction is what? It's an uptrend. I don't need the higher time frame to tell me that we are in a bullish market, right? So we have higher highs, right? Higher lows. So I'm looking for key levels, right? Key levels. So right here, we have, let me erase this. We have a key level right here, okay? We have resistance turning into support right here, okay? So guess what? Market came back to this level right here. And guess what? A nice reaction, nice, again, pin bar, rejection bar, whatever you want, a nice solid bar too. We're looking to get in, right? So we could target the highs right here. So that would be one trade right there. But now, notice that we have another trade where we have a demand trade, okay? The market pushed up, okay, right here. And demand is aggressive buying. So we have a nice aggressive buying right here. And it pulled back to this level. So right here, we have another opportunity and we can get in the market. And let's say that we got in right here, right? And we got stopped out. Guess what? It is what it is. That's the market, right? Trading is not pretty, guys, right? So don't expect to basically, win all the time. You're going to get stopped out, right? But for the most part, if your winners is, 2x, 3x, you're going to get your money back. So let's say you went long right here, guys, and it stopped you out, right? Guess what? Notice how it stopped you out, but it didn't go that far, right? We still at these swing lows right here, guys. The market didn't go that far. So a lot of people on the internet will tell you that if the market breaks a supply zone or a demand zone, that demand zone is not valid anymore. That is 100% incorrect. The zone is still valid if it doesn't break it that much. Notice how we still are at the lows right here, okay? Look at this lows right here. We're still at the lows. It didn't go past these lows that much. So guess what? Notice how we have this nice bullish bar right here. That's another entry, guys. Please do not sleep on the re-entries because sometimes your idea is not going to work on the first try. You need sometimes multiple tries to have one idea to work out. So right here, we have a long situation, right? And you can look for profits to the upside, okay? I think eventually it went up to give you a profits, yes. So right here, boom. So I think eventually it went to get you your profits right here. Here you go. So, now, let's look at another example. Okay, so this example, guys, we're looking at the market and looks like it's ranging, right? So overall, we know that it's ranging. Now, this is pretty much where I'm looking at the market, where, I start to look at the market. Now, I notice, let me zoom in a little bit. I notice that we have what? Supply right here. And not only that, we have to the left resistance. So guess what, guys? When I see this, when I see two levels lining up at the same time, guess what? That is a high quality trade. So guess what? It comes here, gives us two rejections, boom. You can go short when price goes below this candlestick right here, okay? And you can put your stop loss either above a swing high or above this candlestick, okay? And we're looking for profits. And that's how I'm trading every single day, okay? Go to my channel. You can see when I'm trading this style live, okay? So let's go to another example. All right, so here's a good example right here, right? The 5-minute chart, uptrend. And all of a sudden, we just spiked up like this, right? So if you look, to the left, it's really nothing to the left, right? And the market didn't pull back to a key level. So guess what? I skip days like this, okay? It's okay to not trade every single day, guys. The market just shot up, didn't pull back to any key levels. Guess what? Tomorrow's another day. It is what it is. So let me show you guys another example. All right, so right here, we have a resistance trade right here. We have to the left is resistance, okay? And notice how the market came to that resistance, right? And then all of a sudden, we have a nice solid red bar, okay? I'm looking to go short right there. And I will basically, target these lows right here, right? And that's what I'm looking for every single day, guys. This is the 5-minute chart. I'm looking for key levels. I'm looking for resistance. I'm looking for demand. And the reason why I look at both levels is because sometimes the market won't show me a clean supply or demand trade every single day. So I rely on my support and resistance trades, okay? So that's why I'm trading two levels. Now, let me show you guys one more example so we can, wrap this up. But I want you guys to understand what I'm talking about. Okay, guys, so here, again, clear uptrend, okay? Now the market pulled back to this support level right here, right? Now notice how we have this swing low right here, right? The market came back to that swing low, okay? Forming some type of support right here. To me, this is a great trade, okay? And a long opportunity right here, targeting the highs right here, okay? That is how I'm looking at the market every single day. I'm looking for these support areas. I'm looking for these swing lows, these areas where resistance turns into support or support turns into resistance. I'm looking for supply zones. I'm looking for demand zones, right? I'm looking at the direction on a 5-minute chart, right? The 5-minute chart is going to tell me whether today is a trending market, is it, ranging, whatever the case is. It's going to tell me the direction of the market, okay? It's not going to be the daily chart. It's not going to be my 4-hour chart. It's going to be my 5-minute chart. The 5-minute chart I rely on heavily because it's going to show me everything. If it's not clear, guess what? I'm not trading. If the market doesn't pull back to my level, guess what? I'm not trading. Tomorrow's a new day. So that's how I'm approaching the market, guys. Back test this stuff. And the best thing I can tell you is only trade when it's clear, right? When it's like a clear picture, that's the best time to take a trade. So if you enjoyed this, hit that like button, guys. Thanks a lot for watching my videos. Check out my other videos on this channel. If you have any questions, let me know. Comment below. I try to go over your guys' questions. And again, thanks a lot for watching. Have a great day.